Hey guys, Rob Mitchell here. Thanks for coming in for our webinar today. Must know E-mini market entry patterns, presented by Steve, and we'll get started with that in a couple of minutes. We had an amazing registration and interest for this webinar, so we're super excited to have you all on board. We started these trading rooms about 9 years ago. Actually, it's pretty darn close to 9 years ago right now that we first started the first trading rooms. And it's been an incredible journey of learning and exploration and advancement. And Steve came on board maybe I think about 7 years ago or thereabouts with the stock index trading room. And it's had an incredible popularity, even exceeding my trading room in time. And they continue to develop new concepts with the same tool sets that we began with. We started with these trading rooms with a basic trading toolkit. And for the most part, it's the same thing today. It's not new, improved. It's the same concepts and principles. And what's amazing about this journey is that we've done this by advancing the existing concepts, because the existing concepts are based on the way markets actually work. Yeah. And so I'm super excited that Steve will be presenting today for that. And he's got a bunch of really cool stuff to share with you. Steve came to my trading room initially as a member, and he was a really hard worker and started pointing out some really amazing things. And we went from there, and then eventually I asked him if he would head up the trading room, which he did. And so without any further delay, I'm going to hand you over to Steve, and he's going to present today must know E-mini S&P market entry patterns, and share some other additional things with you. Steve, take it away.
Thanks, Rob. Good afternoon. Somebody give me a thumbs up on the sound, because I don't even know I like to talk to myself, because I like to talk to intelligent people. Ha ha ha. I want to make sure. Thanks, John. Good afternoon. Rob, first, let's plug Rob. Rob Mitchell, World Cup trading champion, believed to be one of the largest E-mini traders around for quite a while. None of this would be happening without Rob. And I don't know that I would be a winning trader, maybe, but basically what we have in our room is the approach that Rob used to become one of the most successful traders, E-mini and now crude. And he's looking over our shoulder, and we run things past him. Members ask questions that I don't know. And so your input goes directly into a mega master trader. So that's an advantage that we have. And so, Rob, thanks for all that you do for me and changing my life and the people I care about. I'm going to make this legal. If you've never read that, please do so. And come back. We don't need that. This is important. I'm going to go through this pretty fast. If you're new here, I've got 5 or 6 slides that I'm going to go through. We're going to look at some charts. It's probably going to take 25 or maybe 30 minutes, and that'll be it. And this will either make perfect sense or it won't make any sense at all. I'm not a professional speaker. I'm not a professional presenter. I'm a retired golf professional. This is critical. My certification has lapsed. I was a licensed sports psychologist, and trading, the thought process behind trading is exactly the thought process behind professional golfers assessing the decisions they make. This just lets you know that it's important for me to win. It's important for me to win. This is nothing other than I was willing to outwork people. I'm not gifted by any means. Our room is not about me. Our room is about our members. It's about you. And can you become the trader that you've always dreamed that you can? I believe you can. Rob believes you can. And that's our job to help equip you to do that. But anyway, all this is just to let you know, we work hard. We take winning seriously. And we're proud of the product that we offer. So let's talk for a minute here. Are the markets are they ordered, or are they chaos? And you know, if we're having a winning day, they're ordered, right? Am I the only person that ever felt that way? Yeah, if I'm having a great day, they're men, they're synced up and they're doing what they're supposed to do. And you know, if I'm getting chopped up a little bit, it's like, what happened to these? So anyway, that's the question that all traders, you know, oh no, it's chaos. Oh no, it's ordered. And what Rob, many years, many years of hard work. Yeah, he talks about how hard I work, and I do, man. He has put his whole life into this and gives it to us. Markets have memory, and it's not. See, I have to be careful about some of the things I say. I can't say the markets repeat over and over and over and over, but we've proven over 7 years that they do. Markets repeat. Scale changes, but other than that, fear and greed are played out on our chart canvas, and they look the same today as they did 100 years ago. So in the room, we've proven for years that within what appears to be chaos, there's indeed ordered, repetitive market action. Now, if this were not true, we could not succeed as traders, period. Okay, so it's this repetitive nature, this repetition, that allows every winning trader the needed edge they have to have for success. Now, this is important. We believe the future will be more like the past rather than less like the past. And because of that, we're pretty sure of what our future is going to look like. Couple of things that Rob developed early on. You know, it's funny. Rob's been talking about order flow for 10 years because that's as long as he's been doing it. And it is the buzzword in the past 6 months in trading. That's all you see. They take his stuff and tear it apart and try to figure out, how did he come up with this stuff? And it's an honor. It is an honor to be, to have him associated with what we do. But anyway, the two most common, reliable, repeatable, pick your superlative market actions are the market's desire to test potential turns and then confirm that there's a change of direction. What that does is it allows the innovators that are building positions at turns to continue or to stop. Okay, we're going to show you how we take advantage of that with one of our signals. It's pretty cool. It's way cool. It's more than pretty cool. So, but all markets like to test tops and bottoms to confirm. In that way, the smart money knows what to do. Until it's confirmed, the smart money has no idea what to do. The second is the market's need to trap unknowing, unsuspecting, pick any adjective you want, traders on the losing side of order flow. And their stop losses are going to move the market against them. We're going to show you how we find those at about a 90% probability clip. And I'm going to show you just a couple of signals that we're using, market entry signals. Let's talk about signals for a second. I'm going to show you some things and show you this month. I'll show you a recap. The signals I show you may never win again. We're not saying we know the future. Yeah, they may never lose again, but we feel like something that's worked 88% for 7 years is going to work 88% for the next 7 years. Okay, that's what we believe. So here's the thing: price follows order flow. It must. Most traders, especially traders that struggle, are trading price bars. Well, price, you can't use price to predict price, y'all. Okay, I'm from the South. You can't use price to predict price. So quit trying, please. Okay. If you don't do anything from today, but get that, it will change your trading career. Price will not predict price. Order flow predicts price at a highly, highly likely level. So most of the time, most of the time, compliance wants me to say most of the time, and it does most of the time. So it stands to reason that any advantage in reading order flow would create a winning formula for all traders using this number one key advantage of trading. So following order flow is a must for us in the room. That's all we do. Why? Because price follows it. We have breakout patterns where order flow leads price, and we don't mind waiting on those. They're so good. But as we like to say in a room, it's not the main thing, it's the only thing. I'm going to show you one application of breakout order flow and how we use that in a room. And you can apply this one concept to any market, to any time frame. You can adjust it to your level of understanding and thinking any way that you want. Excuse me 1 second. Thank you. I had a tickle in my throat. The second major advantage that Rob gave us was markets like to trap unknowing, unsuspecting traders on the wrong side of order flow. We have a visual that is so simple to see. We could make this really hard to read, or we could, Rob has made it very, very easy to read. And we're going to show you what it looks like on our charts and how we read that. Super signals. The first one we're going to talk about is the breakout rocket. Okay. And one of the reasons we name our signals is if we start to describe, well, we have this and this, and then this is happening. We've got type 1 divergence and, you know, whoa, wait, it's 4 points down. Wait, while I was explaining it. So we just name them. Batman with a rocket, breakout rocket, other things, pivot retag with a rocket. You're going to hear the word rocket a lot, and I'm going to show you why, and I think you'll fall in love with it as our members have. So this breakout rocket combines order flow lead out, where price is going to follow order flow pretty much across the board, and a trader trap rocket. Of course, there's just too much new money on the wrong side of order flow where they're going to get squeezed, and we're going to take advantage of that. So basically, a rocket is just simply a signal where there's an excess of orders opposing order flow, and they have a great chance of getting squeezed out. We use an order flow breakout pattern that shows the likely direction of future price movement. So when you put those two together, you get new money, weak money trapped on the wrong side of order flow, and a breakout. We can get in front of that a lot, and the market moves in our favor substantially. And I'm going to do this way. I've just changed my mind. I made an executive decision. I'm going to bring up a chart. Let me grab this. Now, this is today. Today was not very, yeah, we don't need that one. That was after the number came. I'm not going to show you stuff that's untradeable. Okay. We're in congestion, and we don't like to trade this, but we have members that do. And this is what we had. Okay. We would love to say, don't trade inside this. And we know that falls on deaf ears. So what I'm going to show you is the pattern, and then I'm going to show you this month, what that pattern has yielded as all. So what we have is when we get a green, we're looking at this indicator, trader oscillator, traditional advanced. And when we get we call these delta pressure bars, and basically they're relaying to us the percentage of selling versus buying inside this bar. Okay, here we have too much selling, order flows up and they get squeezed. Okay, now the market's not going anywhere, so don't expect this to be extremely vibrant. Okay, it's not going to do that in Encompassed. But I'm not going to go get, I'm not going to go 3 days back and find spectacular. We had some, and we will again. This is what we had today. This is what this signal gave us today. We had these in opposing. We hate this, just despise this. We can't do anything about it. The signal, it's a breakout rocket. It's a breakout rocket. You can use discretion. I'm going to show you something we've gone to in the past few days and probably are going to change the room chart where it would have sell this and don't buy that. I'll show you that before we wrap up today. But anyway, breakout rocket, breakout rocket. So what you're looking for with this is you're looking for too much buying. Now, order flow did not come through our midpoint line. We love trap trader oscillator to go from inflection to midpoint through midpoint, but it didn't do it. Okay. So that might be a filter for some and not for others. We don't trade this in the room if we don't break through the midpoint line. We don't mark it, but that doesn't mean everyone doesn't trade it. Okay. We just show our members what works over time, and they can decide how much of the apple they want to buy. But I was doing some teaching and I said, hey, we've got a breakout rocket. It's a Batman. It's a weak Batman. And our members love this. Basically, we've got style price and type 1 divergent. Trap trader oscillator is saying there's a ton more selling here than here. We get this lead out, or when this orange line goes through these green support, order flow support, you'll notice we go down. When the orange line goes above the red, this is a lead out up, and you'll see the market goes up. Okay. And it's, y'all, it's not any harder than that. Okay, it's not any harder than that. Here we did not go through, we did not break through, and we came back down. Here we did break through, and we went up. So that is that's the breakout rocket. And let me pull this over. This is our an incredible tool called trade markers. And with this, we can load any strategy we want, we can mark anything that we want to mark, and then we can test it and look at the internals and say, okay, this worked for us, can we make it better? And just really a brilliant tool that one of our members developed, and it's available if this looks great for you. Okay, so what we have, and I've done this whole month, you see this is the whole month. Okay, we are with a 15 tick stop. This is 1.2 points and 5 points. We're not suggesting trade it that way. Okay, some people like scalp 1, some people like scalp 2, some people like to hold, some people want to take 1 or 2 off and leave a runner. What we're showing is there are multiple ways to take this and profit with it if the future is like the past. We don't know that. We've traded this about, what, 5 months now? Probably, maybe 4 months. This was staring at my face the whole time. And finally I went, holy smoke. So anyway, but here's one of the things I want to show you and what we do in the room. Okay. We go 1.2 points, 2 points, almost like 1 point. Let's move this up. Okay. And then let's go ahead and move this up because we don't need to at the same. And these are really close together. Let's move that up a little. And now we'll look at our expectancy. 167 was basically all the trades that were included for the month, win, lose, or draw. That was the amount of profit they generated from this signal based on the ability to execute. Now, if the market's going real fast, we don't put anything in. I didn't mark anything. There would be nothing on our recaps after 2 o'clock today. It's just, that's just pretty unrealistic. So let's see if our 167 per trade gets better or worse with this. Okay. Oh, okay. $60 a trade. So 35, 40% more. That's cool. And, you know, we can say, okay, I want to use a smaller stop. Okay. 227, 183. That's fine. Most people want to use a smaller stop. It's still very profitable. What if we went up? Not a whole lot. So what we do with this over a long period of time, because day to day, you know, if we look, we get 9, we get 5, 100% winners. We get 3, two winners and a loser. Now this is the whole strategy loaded, 3, 4, 3, 3, 2, 7. Okay. But we know over a long period of time, we don't have to guess. What if, you know, this signal presents itself? What if? We don't have to guess. We know over a long period of time what we can expect from that signal. Okay. So that's a breakout rocket. And now let me talk about this. If I can't teach, I'm not going to try to teach this. I'll try to be more brief. If you come to the room, you'll hear about this ad nauseum. Okay. It'll be like, God, that's all I hear about. If you don't, none of this matters, right? None of this matters. So the second signal, this is probably the room favorite. We're taking another deep look at a different look about how to set our tools up, and I'm going to share that before we get off. 2 weeks ago, you know, if I said, hey, what's the recap of signal? What do y'all want? Pivot retag on color with a rocket. Pivot retag on color with a rocket. And you're going to see why in a minute. Okay, we find this at major turns in the market. Every time the market turns, we don't get it. Every time we get one, it doesn't signal the bottom and the top, you know, but pretty close. It's pretty close. It'll give us some very long moves if you decide you want to trade that way. And it combines trader traps and early change of momentum at market turns. We find a new extreme. We look for price reversing. I'm going to like get the cliff notes. We test the new extreme, retag it. The rejection of the original direction with a rocket. I'm going to talk about the science behind that on the chart. And basically what it shows is there's the abundance of Johnny and Jill come latelys that are afraid they're going to miss something. And wouldn't you know it, they're going to get hit once again, over and over and over, to move the market in a direction. So I don't think anybody would argue this is a pretty incredible market happening that happens over and over and over and over. But can we find those and put stuff in it that makes it tradable for us? Okay. Now let me do this. I'm going to do this backwards. Four, 4, 2, 5, 2. You know, and that's let's face it, you know, 100%, it doesn't matter, 100%, 100%. You know, some people want to trade more than that. And I get you. I understand. This is a major market turn. You're not going to get 20 of these in a day, okay? So for the people that are looking, okay, I want somewhere to sink my teeth in, you know, and ride it for a while. This is your lucky day. This is what you're looking for. Okay. So what we have is, you know, we have the market sort of in cluster here, and it breaks out up here. We come down and spot momentum turns red. Okay, we go back up and that gets rejected. This point holds. I'll show you some more. Okay, so what, Steve? Nothing. Not a thing. Unless there are too many people thinking that we're going to continue going up, which is the case here. Too many people think we're going up, but order flow is saying which direction? Which direction? Anybody? Order flow is going down. So now, does price follow order flow? Was anybody paying attention? Somebody. Hey, Gordon, does price follow order flow? Most of the time. Yes or no? This is the way I teach. Yeah. Hey, Terrence. Shaka, Terrence from the Big Island in Hawaii. Price follows order flow. Hey, Kevin. Down. Price follows order flow down. So we have this structure that looks like, if you didn't have this, it would be like, well, I really don't know what's going on in here, Steve. Yeah, well, we do. Major market turn. Major market turn. And I could skim through this chart. I could show you retag on color. This is in congestion. We would never trade that, but we have members that do. But I would show you things like that. Retag on color. That. I can, we'll show you these all day long. So for the month of September, and I went ahead and moved this 8/12/24. There's no sense in going through all of that. We've expanded all of our targets. These numbers seem ridiculous. I've gone over this chart so many times, and our members will tell you, no, that's right. That's right. The people that are trading this will tell you, no, that's right. What we've done now, let's talk about this for a second. This is better than normal. I will tell you, this is substantially better than normal. This first number is about 92 or 3. If I were to put 200 in here, it would be 92 or 3. This number would be hover right around 90. And this number would be in the upper 60, 68 or 9. But it's 24 tick profit with 15 tick and no management. You can get in here and play with that if you want. We don't have any management. And the point is not this, am I going to make every nickel of that? I don't have any idea if you can execute this or not. But we pointed out in the room on an ongoing basis, we have a pivot retag on color with a rocket. So see what happens is we have this delta bar that's pegged, saying pretty much all the orders in here were buy orders. Bully. Okay, thank you. Bingo. We're dead. We're ready. We are ready. And there it goes. And again, over and over and over, you'll see these. And I'm working on a couple of new signals for the room. And for me, I work on them for me. But you'll start looking at this and you'll go, Steve, they're all over the place. They are. Sometimes we'll get them in, if we're not careful about how we filter it, we'll get them in congestion. That doesn't bother some traders to take some hits in here. It does others. So we put pretty high filtering on this to make sure what? That we get this type of results. What's the price for that? Sometimes we only get 2 or 3 of these in a day. But what if, this is not a hard pattern to see. It's not a hard pattern to learn. What if you got 2 or 3 of these and 2 or 3 of the breakout rockets and things like that? It's a lot of fun. We're having a lot of fun in the room. Questions on this? Members are really enjoying that. Okay, so pivot retag on color, that's we call that a super signal. I think you can see why we would call that a super signal. Now, drum roll, please. This is I knew this was good. I worked on, we wrote this in the room and we worked on it for a substantial amount of time and started using it, shared it with a couple of our better traders and they started using it. Results changed immediately. And I'm honored to share this with you. It's a new look at an ancient proven trading secret that Rob talked about in the beginning. Hey, this stuff hasn't changed. The market is trending in a direction. Okay, it runs out of steam. It breaks structure. It starts trending the other way. All we have to do is find the edges. And we've got some pretty good ideas about where those happen most of the time. But this idea that I'm going to share with you Rob will tell you and has told you that this propelled, that's a good word, into the rare air of being a mega master trader. And that is range expansion follows cycle expansion. Markets tends to be accumulated and distributed at key inflection points throughout the trading day. Bully. But we know where these areas likely are going to be that have hidden value in those. And that can make the difference in being a pretty good fight for positive results on an ongoing basis. And an amazing trader. I will share, I'm going to take a side. One of our members, I'm very proud of our members. It's been with us probably, I don't know, 6 months or 8 months, or maybe a little longer. A good trader became to the room. He traded 16, 17 years and knew about the markets. And, was like, okay, I have good days and bad days, and I'm not getting where I want to get. And we have swapped some emails. He, this morning, he sent me an email yesterday, and I've responded and whatever. He said, well, I'm successful pretty much every day now. And I went, okay, what changed? And he said, I started marking this structure reference. I started marking that on my chart manually in mid-June, and immediately things changed. And since then, he's had one losing day of $100. And I believe in my heart it's true, because he doesn't chat in the room. It's hard to get him to say anything. He's not here for a good time. He's not here to have fun. He's here because he's a serious trader. But he said, I went to structure. And so it helped me determine where's likely support and resistance. I will trade. The market moves away from support and resistance until it gets too far away, and then it comes back to destiny. There's scientific reasons. We'll teach you that in the room. We're not going to talk about that here today. But all of a sudden, structure reference changed his trading career. We have a founding member from San Francisco. Day one, embraced structure. He's been trading it 6 or 7 months. And I'm kind of repulsed at the success he's having using this approach that I'm going to share with you. So markets move away from support and resistance, and they trend from inflection points. So what if we worked months and months and months, which we did, and we've came up with a structure reference algo that basically gave us support and resistance that was accurate about 90% of the time. And then all we had to do was not determine direction. Thank you. But then just find, where do I want to enter this concept from? Okay. And I'm going to show you what that looks like right here. And this is a little different look. And I'm not going to teach structure reference here. I've got some teaching in the members area. Basically what you need to know, Trent coded this for us. Rob cleaned it up for me. This is a joint effort. We wrote this in the room, and this is a joint effort. But basically, this is what, I can't tell you what is the best. People say, what's the best? I don't know what your goals are. This is the most profitable with the least amount of risk. So basically what happens is the market is trying to go up, down, up, down, up, down, and it breaks down. Okay. We get a red background. We go up, and we're at an inflection point. Ultimate trend identification is saying down. Structure reference is saying down. Trap trader oscillator is saying, we are overvalued, and we have all of these knuckleheads buying this against order flow. We all already know which way the market's going to go from here. 90% of the, not 100% of the time, you already know which way it's going to go from here. So we have a type 2 that's out of bounds with structure. How about that, boss? How about that one, boss? So it's stretched with structure. Okay. And I think I've got, hang on a second. Yeah. So here, wait a minute. I want to make sure I'm giving you the right thing. Yeah, I hope you don't mind. See, y'all thought I was slick, right? Yeah, that wasn't right. Okay, so let me put this back where it was. You can see one tick. You can see what 16 tick stop does to profit versus 15. Just amazing. But we're going to compare apples to apples. 2 points, 4 points, 6 points, 15 tick stop. This is for the month of September, every trading day in September. And basically what we've done is we've determined a method not only of direction, but also targeting. I'm not going to go through that, I don't think. I might. No, I won't. You can come to the room for that. But what's happening is I'm going to come all the way back over here. Our reference, this was from early in the morning for our international friends. We break up. Okay. Well, support, the way I've written it, is right here on this bar. And you can see the market tests it. We go up, 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 up. We break it. Okay. Struggles on the open, but I don't know if you want to trade the open when the Fed's coming out with the announcement or not. That's up to you. But here's resistance. We tag it. Well, tag it. Tag it. We create up, we create down, we get our type 2s, and we go on and on and on. So what we've done with this is Chris has coded background color to read our rules, and it's given us a whole new look at the market. This, again, type 2s with smart momentum is what propelled Rob into the stratosphere. Here's one that I took earlier this morning as I was preparing for this. It is a type 2 with a rocket that's with structure. But there's serious consideration. We have this chart now running over on the side. There's serious consideration about our members love it. They love it, love it, love it. This idea has changed more people into winning traders in a short period of time than anything else we've ever done in a room. So we're very, very excited about this. Now, the signal that I showed you is highly selective. We have people that are starting to trade, okay, any rocket that matches structure. Trap trader oscillator undervalued. I trade that. We get down here on a green background. It's hard to find one of those that don't work in your favor. So there are a lot of applications with this. I'm not going to take all our time to go through that. Here's the last neat thing about that. We can do this. Structure traders are trading this wave, this move, this way, call it whatever you want. Okay. When we take that out up, the probability of going here before we go down in here is over 90%. So if we find an entry that we like, we kind of like this entry. Big rocket. To take this out is over 90%. Now, in this case, it's not but 5 points or so, which is still a nice trade. But sometimes we'll get structure measures that are 15, 18, 20 points, and they're like close to 90% to get hit. So basically, what the market is going to argue over is this structure, and are we going to take out this edge or this edge? We're probably not going to live inside the edge. And then we have lots of things that tell us, you know, which way we're going to rotate and where we're going to rotate to. So we have built-in targets with this. So I'm going to go ahead and get rid of this. Yes, it is. So we've done that. That's it. I'm through. I brought this in. I'm human, y'all. This obviously is dated. I would have changed that had I known how, but anyway, it doesn't matter. You know, are there people that come in with an open mind, look at what we have to do, learn, grow, and become winning traders? Absolutely. Absolutely. It does happen. So we're going to trade these signals. We're going to teach those to you where you can get in front. You can use order flow reads to get in front of future price movement like we're showing you. And over time, hopefully you can become consistent, disciplined, and I think you'll be shocked at what kind of trader you can become. So, hey, Kevin, it's good to hear from you. We've got, I don't know, I've probably got 15 or 20 members or former members that have quit their job. Kevin said, I quit my job now. I meant to change that where everybody could see the chats. But anyway, Rob, I'm through now. If you want to take back over.
Okay, hold on. I'm going to close the window. They got the lawnmowers going outside.
Oh, okay. Go ahead and take your time. While she does that, there was I can't say any of
the Steve, I put in, take a look at your Skype. I put Dan asked a question, Michael asked a question. I wanted you to answer those. So take a peek at those. And while Steve's looking at those questions, I'll cover a couple of things, just what comes to mind. This thing that Steve showed last there is based on the way that we ran the trading room from the very beginning. Originally, I had no intention of having a trading room. It was not what I intended, but I had a fellow who had followed me for a long time reach out and said, hey, if you start a trading room, you know, do you want to start a trading room? No. And well, if you do, I'll help you with it. So that's how it got started. And I was just like, okay, well, I'm the kind of person that doesn't, I'm not the greatest organizer. I'm like an idea person, and you know, like I don't wear a watch. I don't even want to know what time it is. And you know, so I'm spend a lot of my time in kind of like creative thought and things like that. So anyways, Mike has been helping me run the room now for 9 years, and that kind of collaboration is what drove it to new heights, because Mike is very structural in the way he thinks, and he doesn't put up with me so much when I'm, you know, being intuitive. Yeah, so it's a great collaboration between rationality and intuition. And so, but this first pattern, we called it the T2. It's a divergent, it's a with trend divergent pattern. And then Steve later on started teaching that once that pattern sets up, the trend will tend to stay intact until you get one going the other way. So we did have a question about trading on a larger scale, because a lot of traders get in trouble trading in tiny scales. And so this way of trading actually, because the smart momentum doesn't respond to anything less than about 4 to 5 bars. Yeah. So if you want a tool that keeps you from trading in structures that are smaller than about 4 to 5 bars, the smart momentum does that. The trap trader oscillator that Steve had on his charts there is locked by bar. Yeah. So, but then Steve called that the ultimate trend identification system, and it's actually related to a lot of things we've done over the years. For example, the smoke signal. It's totally related to that, and all kinds of other things that we've taught. But I'm not going to open this up into a big discussion about that. But there's a lot there. Yeah, structure reference on the UTIS. So the question, Steve, Michael had asked,
Yeah,
all trades in the, okay, so you saw that. Okay.
yeah. Can I handle that?
Yeah.
Can I address that?
Yeah.
Quickly. Okay. Do we call trades in the room or just share signals? First off, I don't know how those would be different. I think the question, and I could be totally off base, I think the question might be, do we trade your account for you? And I ask this question every time we have new members. If you don't want to learn to be a complete trader on your own, let me know, and we'll set up a program. I believe people can learn how to trade. I don't believe everybody is going to trade exactly the same way. So, Michael, let me address your question this way. I mark the 3 signals that we are sharing. I mark those every day, all day. Okay. There are probably 20 better than random signals that traders have used that we have endorsed down through the years. But as we get better, we're more reluctant to share average or better than average. So what we would want, and we would hope you would want the same thing, is, okay, now to be a winning trader, we have to make decisions. We have to say, okay, this is the spot, this is the order flow read that I'm looking for. It may or may not work. Most of them do. Occasionally they don't. So it's not a simple question to answer. I do mark what I consider our super signals, but I don't filter those. I don't say, here is a breakout rocket, here's a weak Batman with a breakout rocket, but I don't think we're going down, so I'm not going to mark it. I don't do that because people will never, say I'm a performance coach, people will never become excellent at anything when somebody else is making decisions for them. So here's what I think, Michael. I don't know you, but I think you can learn to be a master trader. And part of the process of doing that is letting us teach you what the great signals are, you learning how to recognize those, determining which, if any, or all you want to use, and then let the market do its thing. And rather than trying to determine what the market's going to do, which is what 90%, 100% of losing traders do, is focus on what is it doing and let the market tell you what it's going to do, and you won't struggle at all. So I don't want to say, yeah, I'll trade your account for you, because I won't. I'll teach you. If you come in the room, you want to learn how to do this, we'll make sure you know how to do it.
You know, Steve, another thing that happens with that, so like we do the same thing in our room. So we're discussing, because we have even more patterns. I mean, there's like hundreds of them. And so, but I suggest that each trader trade what they see. But we are talking about patterns all day long. And so the ones that you're choosing are appropriate for that. But the important thing is that you learn to see them, and then you learn to expand. Because if you learn just one pattern, you can learn another one. If you learn a whole bunch of them, I never suggest learn a whole bunch of them at the same time. It took me a long time to figure that out. It's a super important training thing. Learn one pattern. Learn one pattern and then take it from there.
Rob, I'm sorry.
Go ahead.
I teach, it may take a couple of weeks to learn how to see, anticipate, execute, manage, wrap your head around the emotions involved in, all the things that we have to do as traders. It may take a couple of weeks to get good at one. And then it takes a couple of hours, because we've gone through we've put our subconscious, we put our limbic decision-making process through the ringer about what are the steps in learning this. And then the first one takes a while, a week or two. The rest of them take a couple of hours. And once you get one, like you said, once you go through that process, then applying the rest of those, it's just a matter of a day or two. But that's important from a performance standpoint, because you can look at our charts and go, yes, but if you can't make yourself take the action that needs to be taken, it doesn't do any good. Or if I do it late or do it early, sometimes I do it, sometimes I don't. All of those things, it doesn't matter what we have. Doesn't matter how good it is. I hope that makes sense. The second, the UTIS chart, and I think Dan's talking about
this. Dan wanted to know if you're using that in the room.
Yeah, we've got, right now I've got it over on the side. I'm fixing to reach out to you. I don't like having two charts, but we may have to.
So that actually merges back into the same original subject. One thing. Yeah. So
correct.
Steve's debating having that. They're talking about it in the room. A lot of people have gotten that software, from Indicator Smart. But focus on the first things first, and then expand from there. There's other people in the chat here saying, all different kinds of patterns. They're chiming in on different kinds of patterns. I apologize, can't see the chat, but anyways, John's asking, how do you enter? And John, these signals as being discussed here are being done, I think on some of these, Steve might be doing these on first continuation bars, but it's done, I use almost exclusively stop limit orders on reversal bars. In a strong moving market, you can trade on continuation bars. I recommend in the beginning you learn to trade just on reversal bars. Is that like 90% of the patterns, Steve?
We don't do anything in room on continuation bars.
Okay, so 100% for the stock index trading room on reversal bars. And I strongly recommend you start there, because trading on continuation bars is an art form unto itself. Also, all kinds of patterns on the trap trader oscillator for that kind of stuff. But there's actually no reason to go there. You don't need to go there. So now George had asked a question, so let me cover that. I'd answered him in writing, but George asked about using like time-based bars. I'm not going to turn this into a lecture about that, but if you go look at a time-based chart, as opposed to the Smart Super Renko that you're seeing on these charts that Steve is showing you, when the market really starts to move, I don't care if it's a 1 minute, a 3 minute, a 5 minute, or whatever. What'll happen is when the market goes into momentum, those minute-based bars don't care about that, and they'll just, those are 30-minute expanding bars, what Steve just showed right there.
I'm going to bring it back up in a second.
Yeah, show that. I'll use that as an example.
Yep.
But this happens on any. Yeah, see how those bars are getting bigger and bigger and bigger as they go. Well, do you want to wait Yeah, you want to wait when that's happening. Now, I'll tell you something else. This is a little bit abstract, but like if you look at that coming up from 12 o'clock yesterday, and those the bars getting bigger, right? These are 30-minute bars, or the ones coming down. You could ask yourself, well, if I took the bars that made up the whole day's range, how many bars would it be? Okay, so if I look at that high up there, way up there around 45.10 or whatever, if I start right there, I got that one that's sticking out at the very top. And then I got another one coming down, and then I can go over another 1, 2, 3, 4, 5, 6, 7, 8 bars before I pick up another one. Actually, 9 bars before I pick up another one. And so that entire range right there from the high to the low, if you ask what's the minimum number of bars that time-based bars that made that entire range, and the answer is 4. Right? 4. Whoa, wait a minute. Those ES went from 45.10 to 44.50. And there's only 4 bars involved. Well, the other bars were like in some form of consolidation. Yeah. So that might be hard for you to see, but like you could take a 5-minute chart and put it on, just play around with it. Take 5-minute chart, stick it on there, and ask what's the minimum number of bars that makes up the whole day. And you'll be surprised. It might be like 7 bars makes up the whole day in the ES. Oh, is this a 5?
It is a 5. And the question I always ask whenever, and that's a great question. What about time bars? Okay, that's a 5-minute bar.
Yeah. Now, if Steve shows you that on the ES chart that we use in the room, that is a lot of bars and a lot of trading signals that happen.
Well, we've got probably 3 deadlock winners in this. I've already looked.
Yeah, there's 3 winning. No, way more than that. I'm going to argue with you, Steve.
I know.
Today, anyways, right?
But 90, when I say deadlock, we don't trade anything less than 90%. Anyway, but no, the question is excellent. What about time bars? What about 5-minute bars? Are very popular. You may get 4 signals in our 4-8 Rincos, 4 winning trades, waiting on this bar to print. And that's why we do what we do.
Yeah.
Not for everybody, not for everybody, but Rob knows,
so
Rob
on that
knows
subject, I would recommend, if you're just getting started, that you use a structured bar. We've got other bars like the ultimate tick bar and the ultimate order flow bars. But to get started, there's a reason why we use the Smart Super Renko in the trading room, because the bars parse the market out into order flow chunks that are 4 ticks in the ES. Yeah. And so what you're doing is you're actually breaking, it's like a scientific method. You're breaking down the problem. Yeah. You're breaking down the problem. Does that mean that you need to look at every single little bar? No. But you're breaking down the problem so you can understand, because what's going to happen is that the bars that Steve is just showing you, whether it be 5-minute, 1-minute, 3-minute, 30-minute, etc., are actually, the bar is actually a filter, is what it is. It is preventing you from seeing all kinds of things that are there. And so, anyways, that's an important subject. That's a big subject. I've done webinars on it before. You could look on the YouTube channel. So, yeah. So, George, if that wasn't clear on that, you could email us and ask the question. Yeah. So, all right. Any other questions, guys? We really appreciate you coming in today. We love what we do, and we love sharing what we do. And so it's really cool for you guys to come in and share part of your day with us to do that. Yeah. Thank you, Ira. Hey, Ira, it's great seeing. How's the baby, man? How are you? I've seen so many people chiming in today. It's great to see y'all. We had a great turnout. It's incredible, actually.
It is fun, Rob. I always enjoy, you look and I see people and it's like, oh, wow, it's so good to see you.
So if
George,
you don't have any more questions, that's what we got for you. Yeah. And Steve, if you had anything else, that's...
No, I'm good.
Yeah. So, all right, guys, thanks for coming in. We'll try and get the recording posted, tomorrow sometime. We always post it on the YouTube channel. We usually post it on the website too. If you're not following us on the YouTube channel, I would recommend that you do. Where Steve puts out all kinds of content on there, and that's one of the ways that we communicate with you. Yeah, so get on there, subscribe, and you'll get the notification when we post the recording. Yeah.
Thank you, John. Rob,
all right, guys. Thank you.
Hang on, Rob, 1 second. May
Sure.
I offer this? I already did. Thanks. If you're interested in coming and start learning how to do this with us, visit our website. If you want a discount, really nice discount, use the coupon code special member. And we'll teach you exactly what we do is what I showed you. Nothing more, nothing less. Real simple, basic, super effective approach to trading the market. And if that looks like your deal, we'll see you soon, and we'll listen to your success stories.
All right, guys. Thanks again for coming in. We'll see y'all on the next one.